Welcome back to another episode of MultiFamily AP360 and our next guest, Jill Jensen from Sonos Capital. Welcome, Jill.
Hi, thanks for having me.
Yeah, sure, absolutely. And a little bit about Jill. Jill is a real estate investor who skipped single-family homes and jumped right into multifamily properties, purchasing on mobile home parks. Now, Jill is the CIO at Sonos Capital, raising capital to invest in large mobile home parks, providing passive income opportunities for individuals seeking to capitalize on their money or leverage retirement accounts. So, with that, Jill, you want to add anything to your background?
Yes, I first was in the position of my investors. I had a large business that was generating millions of dollars annually, and I got bought out of that. And I was in a position where I had money, and I was like, I know my money can make me money. How do I do this? And a lot of people that invest have real estate. And so instead of just trying to figure it out, I just went out and found people who are already highly successful in that area. And I joined their teams or I followed their lead. And I realized if I do similar things, I'll have similar results. So I got my money working for me and then realized that I ran into taxes and realized I needed to hold assets, not just be the lender. And so I skipped single family and I jumped into the mobile home park space.
Awesome. Thank you. Thank you. You shared very quickly. So, how did you find these good operators or who did what you want to do?
That's a great question. I actually just started to connect with people online. I joined different real estate and investment Facebook groups. I joined a mentorship. And within those communities, instead of calling people who are trying to sell their properties, I was just trying to connect with every person inside of those groups, looking for the people who are already successful in those areas. So it really just came down to networking and making more friends to find those people.
Yeah, awesome. So, would you share any tips finding good partners, investors through those communities?
I'm going to give some advice that my first mentor gave me. And he said, loan to own. Don't lend on a deal if you're not willing to own the worst case scenario. So as I was investing my money, I partnered with someone and he was really good at all the underwriting and the negotiating. And he'd been doing this for over 10 years. And the reason why I felt comfortable was because we had more collateral than our loan was worth. So when I got my foot in the door with my first lending deals on, let's say, a fix and flip model, I held collateral of a property that was worth more than my loan. So worst case scenario, I actually won bigger because my collateral was worth more than my loan. And then from there, I just found the person who was already really good at mobile home parks. And I asked all the same questions. How did you get really good at this? What do you do? So then I just went and did the same things he did.
Awesome. There are so many asset classes, right, in commercial space, like mobile home park space, multifamily, self-storage, office buildings, retail, all this stuff. So what is the reason behind picking mobile home parks?
There's a lot of things that I didn't realize that have huge advantages when you're investing in mobile home parks. And since we're talking about multifamily, I'm just going to compare an apartment complex, a single family home to a mobile home park. And when you look at a single family, average price right now is around $400,000, where if you want to rent an apartment, it's around $2,000 for a 2-bedroom, 1-bathroom. And a mobile home, we're able to get them at the wholesale price, and we're able to get them for around $52,000 for brand new 2-bedroom, 1-bathroom mobile home. The reason I say this is because when you put a mobile home on a pad, the mobile home parks, you're just renting the land, not the actual homes. We sell all of the homes. And so the average person pays around $500 in rent. to rent a mobile home park space. And affordable housing is in such high demand. So someone being able to afford a house is the case right now. There's quite a few people that can't even afford being in an apartment. With the high or with affordable housing in a crisis, mobile home parks are in high demand. And the average person stays in a apartment for 2.5 years, where a mobile home, average person stays 14 years. Reason I say that is because we sell off the homes, there's low turnover, there's low maintenance because we're not dealing with the tenants or the toilets. So that means low overhead. There's high cash flow. And my favorite is high tax advantages. Single family home depreciates over 27 years, where a mobile home park can depreciate over 15 years. And we can take bonus depreciation year one. And the reason I say that is because we offer that to our investors. So just being a limited partner, you get to take advantage of the tax advantages as well.
Got it. So the comparison you made, like 500 rent versus 2000 rent versus 450K price, is on the same market or different markets?
Say that again?
So you made comparison statistics, shared some statistics, right?
Oh, right.
500 rents for mobile home park space, 2000 rents for apartments, and 450K like price for single families, right? All these
Right.
are like same market or different market?
That's just a general average over the nation.
Yeah.
Average rent for a 2-bedroom, 1-bathroom apartment is $2,000. And average rent to rent a mobile home park space. It's definitely going to be different if you're in California compared to West Virginia.
Yeah, yeah. So yeah, got it. Thank you. That's good statistics. Any other advantages with mobile home park space?
Yeah, those are some of the biggest reasons for myself, is because when I got into the space, it was, how can I have my money make me money, but yet still be hands off, and having the low maintenance is really a turning point for us.
Got it, got it. So what markets you guys are focusing? What size of pads are these communities you are focusing?
Some of the things we look at when we're purchasing a mobile home is we like quality. It's more of the quantity of units. We are like a fix and flip model. It's okay if it's distressed, it doesn't look pretty. That's why they bring me in and help bring in the value. So we're looking for mom and pop off market deals. And our markets are the Midwest, more red states, got to be landlord friendly. Right now, we're looking at a 17 park portfolio in Arizona. And the last park I closed on was 102 units in May, and it was also in Arizona.
Got it. Thank you. Your specifically, your role will be like capitalizing for these mobile home parks, right? So share me a little bit more about your capitalizing strategy. So which route you're going, like syndication model versus co-GP versus fund model, like which is like hot in current market. Yeah.
Yeah. Okay. Syndication versus a fund. Syndication is more of approach. So if your audience doesn't know, but a syndication is when someone has a deal. Let's say someone finds a mobile home park and they need to go raise money for the park. Then you have what's called a fund. A fund is where I'm constantly raising capital, even when I don't have the deal necessarily right in front of me. I have the money ready to go. So when a deal presents itself, I can take it down quick. Ours is a fund. So I'm currently raising capital for this park. I like to show my investors, here's what the park looks like. Here are the numbers of reflecting off of your investment. And so even though it is a fund, we still like to show our investors the actual parks that they're investing in.
Yeah. So it's a blindfold fund.
Yeah.
Okay. So your investors, your funds are like 506C or
Exactly.
506B.
506C. So accredited investors.
Okay, okay, got it, got it. So what are some advantages going with fund model?
Some of the reasons why we picked a fund is because we're growing on a bigger scale. And so when we're taking down a 17 park portfolio, we can bring in more investors when it's a fund model because the money is going into a pool. You're going to have lots of people on an LLC. It can be complicated when you're trying to deal with a lot of investors. Everybody has their name on that park, where put your money in the fund. It's actually a safer route. These are just the parks that's projecting your returns.
Got it. So what size of fund it is? What kind of returns you're offering to your investors?
That's a great question. So currently it's a $10 million fund, and it's a minimum of $100,000 to put into the fund. We can get around a 2.39 money multiplier on the current deal that we just closed on. So how that works is you put in $100,000 and you get paid quarterly distributions. It's a 10% pref, so 10% every year on your $100,000. On top of that, we're splitting the cash flow 50-50. So you're getting those distributions every quarter. In year 3, we will refinance, and investors will see around 70% of their money back. And then by year 5, in between year 5 and 6, we will either sell the park or we will refinance and get our investors their entire return back by the end of year 6.
What is the time frame you're looking for this fund?
We're currently looking, I'll probably close on this fund. We'll be opening up another one by next year, because this current deal that we're looking at, I'll be raising $8 million. And so I will be over the 10 million mark by the end of the year.
Sure. Share us like some best practices around capital raising. That's where you're heavily involved, right?
Yeah, that's our everyday model. So I'll give you the example of the park that I just gave you the numbers on. So it was 60% occupied and 40% unoccupied. What we did is we purchased this park from an 85-year-old man. He's just retired, ready to retire, tired landlord. And the rents were below market value at $390. And the rent in the market was $500 to $550. And remember, this is only 60% occupied. And this thing was already cash flowing around $184,000 after expenses. What our model is we're in the process of bringing in new homes and selling those on the vacant lots. We genuinely want to provide affordable housing, so we are selling the homes at cost, not trying to make money off of the home themselves. We just want to be collecting rent on the land. And after we bring in those 40 homes, raise the rents, by year 5, this will cash flow after expenses around $340,000. And with that is when we split also with our investors 50-50.
Got it. Got it. Would you share any challenging experiences in the current market because of inflation, high interest rates, different challenges going on, right?
One thing I love about our model is we're able to get these from mom and pop. And a lot of mom and pop or people that have owned these for 30, 40, 50 years bought them on seller finance, which means we've been able to also purchase them on seller finance. And because I don't need as large of a down payment because it's on seller finance, I've just personally raised that capital than having to go get a loan from the bank or worry about high interest rate. Like the park that I was talking about, he carried the loan. And so seller finance at $1.5 million, and it was at 6% interest and interest only payments. So people talk about the market and is it hard to find deals? And I always just go back to, you're always going to find a deal. There's going to be a tired landlord, someone who passes away, a divorce, some regards. So it might take a little longer to find the deals, but they're definitely still out there.
Got it. Thank you. So are you guys focusing on market or off market from acquisition side?
Off market.
Okay. Okay. Got it. So are you guys doing self-management or third-party management for managing your properties?
It depends on what the current situation is with the parks that we're buying. A lot of times when we're getting these off market, they're mismanaged and we're able to bring in our own management, or help educate or teach the people that are managing it themselves. So we'll go in and help the management get in place, but it depends upon the park and who we're purchasing it from.
Got it. So based on what you did so far, share me any best experience so far.
Best experience was we went I was out there last week and at one of our parks, and we were taking down some of the old homes, some of the vacant homes. And we had someone come and take some photography. I was like, hey, I want a photographer to come. And so one of my partners found someone from the town, and she came in and she said, I used to live in this park over 50 years ago when I was a little girl. And she was like in tears. She was so excited to see that someone was coming into the community, was going to clean up this park. She had 2 children that they could definitely use somewhere to live for affordable housing. And it was just cool I'm on the side of raising capital. I'm in the mix of not dealing, but like working with investors and being able to go into the park and see the value that we're also bringing to these communities was definitely a win for me last week.
Awesome. Thank you for sharing that. So would you also share any challenging experience so far?
We had an investor, we were at the turning point on one of our parks. We had talked to the owner 2 years previous. And so this was like a long deal in the making. And then someone else tried to come in. So we had to raise our price on purchasing it. And then the owner was put in the hospital for months. So that put things on hold. And then we were about to close, and one of our investors was trying to invest and he wasn't going to have his funds in time. So I had to go out and finish raising the capital. And it was just one of those things that I learned. It just took persistence. And when the trial comes in front of you, you just got to keep going. And we got it over the finish line.
Got it. Yeah. Thank you very much. So what's your company's goals for next 12 to 24 months? Where do you see your guys?
My personal goal is I work with those that raise capital. So I help bring on capital, but I also have a team of people. And my goal is to have 25 people, and we're all raising around $500,000 a month in capital. And we can put all of that over the next 2 years. I want to get around 1,100 units a year. So that's the goal.
Okay. So what's your take on current market situation from interest rate point of view or other challenges? So where do you see next 12 to 18 months?
I think we'll hit those markers. I think we'll hit around 1,100 units a year based off of my team that I'm bringing on. And yeah.
Got it. Thank you. So share me any personal habits that are helping you to be successful.
My calendar. I know what I'm going to be doing weeks in advance, where the discipline of having things mapped out. I also have a team of people. So I love the book Who, Not How. I find who knows how to do something over trying to figure out how to do everything. And being able to delegate is how I've been able to grow my business 10x than just 2x. So being able to delegate, finding the right team, and then having things scheduled far in advance. So I know every day what I'm going to be doing to reach those goals.
Got it. Share me any one personal learning that has played major role in your success.
I think I go back to the same word of dedication and perseverance. I'm a single mom and I have 2 daughters. And knowing that I have daughters who are watching me, I want to be a good example to them. And how I'm doing that is by my actions of being dedicated and disciplined every day.
Awesome. Great. Any books other than Who Not How impacted your life?
Yes. So since I'm the one that gets to work with investors, I love the book Pitch Anything. And it just talks about how you can stay in control of the conversation, hold the frame. And what I love teaching is how to get an investor over the finish line. One of the biggest things in investing is you got to have capital. And that's the part that I love, educating and teaching people on how to invest their money and also how to raise capital in general.
Awesome. Awesome. So how can listeners can connect with you, Jill?
Yeah, you can connect with me. You can go to jill.sonoscapital.com and connect with me directly, or even send me an email at jill@sonoscapital.com as well.
Awesome. Anything else you want to share?
That's everything.
Awesome. And thank you very much. Really appreciate it.